Hello, Wolfpack. As you can probably hear with my voice here, I'm still feeling a bit sick, so apologies for sounding a bit weird. I'm going to keep it nice and short today, but essentially what's happened on Bitcoin is quite important, right? We've had that weekly candle close that we've been looking at for the last, I guess, week almost, and we've actually closed below 23.8k and the 200-week SMA, unfortunately, for Bitcoin. And so, as I would have explained before, we needed to break not only above the 200 week, but we needed to break above 23.8k in order to confirm the bottom being in for Bitcoin. Why 23.8k? Flipping over to the daily chart, we can see that 23.8k was actually the support region that we were holding in late 2020 before the bull market. It almost built the foundation for the entirety of this price action. And so coming up for a retest of it from resistance is kind of like a massive resistance support flip in a certain sense. And so I think we've seen that to a certain extent. So yeah, we haven't broken above a 200-week SMA, and we certainly haven't got above 23.8k here on Bitcoin. And so we can only assume at this point, it does get a little bit complicated when we look at shorter term timeframes, but we can only assume at this point that this is a standard resistance support flip. What does that mean? It means when you lose a support zone, right, the 200-week SMA is a major support zone. We've gone into that before, and you guys probably know that by now. When we lose the support zone, generally speaking, you come back up and retest it for resistance before heading downwards further. And at this point, there's no evidence to indicate that we're doing anything but that. And so we have to remain bearish on Bitcoin. Okay, that's very interesting. Now, obviously, if, for example, on this next weekly candle close in 6 days and 22 hours, as of right now, we come back up and we close above 23.8k, then obviously it's a breakout, right? And then obviously that's confirmed the bottom is in because we've flipped what we were meant to flip this week. But until that happens, we're still bearish on Bitcoin. We're still thinking about the Q4 bottom. And the Q4 bottom is something that I've been talking about since around 60k last year, right? I've been speaking about this for a long time. I am a believer in the 4-year cycle theory. I think a lot of people are, but I think that a lot of people don't take it too seriously as a macro trend. The 4-year cycle theory is a very serious macro trend, right? It's a macro trend on Bitcoin that if we apply the date range structures, which I've done in the past from the date range patterns, it gives us a target of a Q4 bottom. It says we're going to bottom out this year, 2022, between October and December. And I think this recent price action and rejection off a 200-week SMA actually does indicate that that's got some truth to it, right? Obviously, the entire downward structure indicates that, but this rejection here and the lack of strength we were showing is especially important. Now, if we were moving to a shorter term time frame, or at least for daily chart, right, and then we will look at the shorter term time frame in a second, we can see that we had a bear flag formation, we broke to the upside, and we immediately went into a descending wedge formation, which we'll look at in a second. We also have topped out in stochastic RSI, and we're going down now, having a correction. Now, the interesting thing about this whole pattern, you would have picked it up there, is that although we've rejected off a 200-week SMA, and although we've rejected off 23.8k, and although we have no real indication that the bear market bottom is in because of this, and there's no actual reversal point yet, we are forming a descending wedge formation. And if this wedge manages to break to the upside, we might actually see another retest of 23.8k. And so this week coming up is actually of significant importance as well. Until we fall out of this region, until we fall below like 21.5k, which is the nearest support zone, in my opinion, we're still going to be kind of at a bit of a point in which you need to keep an eye on Bitcoin, because we could very well jump upwards here. Now, again, I'm not too concerned about daily candle closes. I don't think they mean much when it comes to a macro scale. We're talking about the invalidation of a 4-year cycle theory that has existed since 2012. Okay, I need to see weekly candle closes. A lot of people get uncomfortable when I say that because they're like, oh, I might miss out on some price action. You're not going to miss out on much. You'll probably miss out on 5%, right? At the end of the day, 5% miss out is going to be well worth it when you're considering the 10-year trend we're trying to break out of here. So yeah, I think that as of right now, we've seen a resistance support flip. It's very bearish. Our prediction, my bear market prediction, has not changed once. All I'm pointing out is that there is an invalidation point here at 23.8k. Weekly candle above that would be the invalidation point. But yes, right now, that's bearish. That's a bearish wick to the upside, rejected down, closed just below it, and now we're starting this candle red already. It's not a good start to the week for Bitcoin. It wasn't a good end to last week, and we do have a few important events coming up as well that might actually push Bitcoin either over the line or back downwards, and this is where it starts to get interesting. Now, you'll notice on my screen, I have two distinctive pink dashed lines. Both of these are indicative of the dates of certain events that will be going on from the Federal Reserve of the United States of America. In around 3 days, on the 28th of July in Australia, we are going to be seeing an interest rate hike from the USA. Now, if we head over to the interest rate chart, let me get it on another chart here. We can see that this is of critical importance, right? This could very well determine what Bitcoin does next. And this is why, we have to be paying attention now more than ever. The last few months have been exclusively downwards. We're finally seeing a chance here for Bitcoin. Whether it actually plays out or not is a different question, but we are seeing a chance. Now, we've seen a 75 basis point hike on the last interest rate rise. What we've seen basically is 25, 50, 75, right? And so this is where it gets interesting. It's like, well, if they keep upping the ante, if they go 25, 50, 75, and this time we see 100, that means that the macro situation is still worsening. And seeing as interest rates are a lagging tool of defense that the Federal Reserve uses, if we see an 100 basis point hike, it means that the situation is not near being fixed yet, right? Whereas if we see the Federal Reserve dial it back a bit and say give a 50 basis point hike, that might be a bullish indicator for the market, and it might lead to a pump for Bitcoin, because it means that most of the magnitude of the rate hikes increasing per hike has kind of died down, and hence the situation in their eyes is simmering a little bit, right? So very important. If we see a 75 or 100 basis point hike, I would expect Bitcoin to dump. And if we see a 50 basis point hike or even a 25 basis point hike, I would expect Bitcoin to pump, because that's a sign of imminent relief in the market, or at least in the next few months, right? Very important. And then after that, shortly afterwards, on the 10th of August, which is about 2 weeks away, we have CPI. CPI actually led to this pump. And why was that? Well, I don't know. Maybe inflation's looking a little bit better in the month of July than it was in the month of June, right? That might be the reason. And so that release will give us some clarity on that. But I'm mainly just looking at the FMOC decision, which is the interest rates decision, right? Very, very important stuff there. And it's just 3 days away. And it honestly probably will determine the direction for Bitcoin, which will be very interesting to see how it plays out. Now, I do want to bring up quickly something that I've identified in the S&P 500. The S&P 500 is getting very close to the 200-week SMA on its chart. I know we talk about the 200-week SMA a lot, but if you look back in the S&P 500's history, the 200-week SMA is a very, very, very important support zone that sometimes indicates a bottom. I'm circling times where it indicated a bottom, and you can see just on this chart from 1987 to the current price date, we have seen 1, 2, 3, 4, 5 separate bottoms on the 200-week SMA. And we can see that the only other times we've lost the bottom was during the dot-com bubble, in which we saw a massive drop below it, and during the global financial crisis, which we saw a massive drop below it. And so that is indicative of the fact that, yeah, we could hold it, right? And if we do hold it, great, that's probably the bottom. But if we go below it, we're probably going to see a massive, massive, massive swing below it into the low 3000s, high 2000s region. So not much actual analysis there, but it's just an observation. It's just an observation that this 200-week SMA is very, very important. We're forming a bear flag formation on the S&P 500 as well, which is not a good sign. And the interest rate decision is going to tell us a lot about that chart for sure. As for Ethereum is not giving us good indicators as well. We're going straight up. We broke out of an ascending wedge formation straight up into resistance, and we've seen about a week worth of daily candle closes rejecting off of that red resistance box, which is stemming from 1,600 to 1,700. So that's not a good sign. That's kind of indicative of a reversal there for the Ethereum. And seeing as Ethereum has led the market on the way up, it is possible that it may lead the market on the way down. So as of right now, I hate to burst your bubble. Some of the bulls out there, but you got bullish way too early. Nothing was confirmed. I told you countless times not to do that, and you did it anyway. And so now you're probably reaping the consequences a little bit there. Not to sound hateful, but that's simply what it is, isn't it? We need to be waiting for a macro reversal via a weekly candle close above 23.8k, and this drop that we're seeing now is kind of just a perfect example of what happens when you don't wait for reversals. Reversals are more important than catching the bottom. Thanks for watching. Before we end the video, I'll look into a few things. The first of which is going to be Wolves Crypto VIP. If you go to my YouTube channel and you click the join button, you can see all of these perks come up, and it shows you what you're getting and how much you're paying for it. Essentially, it's 28 USD a month, 40 AUD a month, in which you're getting 15 altcoin trading signals per month, so one every second day, prioritized reply to comments, a 2-hour lecture on market psychology, access to a 2-hour lecture on market psychology, occasional access to my trading view charts, and more importantly as well, exclusive Telegram group access in which we post charts and discuss ideas, etc. We've got about 200 VIP members, about 125 people in the group access there, and it's well worth the price for sure. Moving on. we use the BitGet exchange. And if you're not willing to sign up to VIP and you want to help the channel regardless, the best way you can do that is sign up to BitGet. Not only are you helping the channel, you're helping yourself. But on the VIP kind of signals there, we use BitGet mainly. That's our main trading platform. Why? It's got half the fees of Binance. It's got non-KYC, so you can avoid regulation from your respective governments, which is what crypto is all about, isn't it? It's decentralized. And we've also just recently added in USDC futures. Well, they have. USDC futures have been added in. So we've got USDT and USDC now. And if you sign up using my referral link, you get access to a reward center in which you can gain over $4,000 in rewards by completing tasks of various difficulties. So sign up to BitGet, takes 5 minutes. Moving forward, we've got Become a Trader, a 10-unit course. This is a course developed by myself and MegaWell Crypto. As you can see down here, we both made this course and we both run this course. We have the sole creators and operators. You can read the blurb on the website. 10 units takes you from any level of knowledge on money, cryptocurrency, technical analysis to a level of complete competence in which you can trade confidently and profitably by yourself. So go ahead and check that out on the website and chuck us an email here at cryptoacademycourses@gmail.com. We've got 56 students and you can become one of them quite easily. Thanks for watching, guys. Hope you enjoyed the video and I'll catch you in the next one. Cheers.